business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live. It's India's first digital live streaming business news service. I'm Alex Matthew. First, let's look at the headlines. Asian markets make early strides after equities on Wall Street hit a new record on Wednesday. The US Federal Reserve will stick to gradual rate hikes according to the minutes of the last FOMC meeting. Donald Trump says Steve Bannon has lost his mind after his former advisor calls him stupid in a new book. And a tenth of Maharashtra's farm loan waiver applicants, or 7 lakh farmers, may be ineligible. That's a Bloomberg Quint exclusive. Turning to the international markets now, US stocks rose to an all-time high on Wednesday as a gain in chip stocks propelled the tech sector even higher. S&P 500 closes above the 2,700 mark for the first time. Bloomberg's Abigail Doolittle wraps up all that's happened in the US market on Wednesday.
The major averages finished higher for a second session in a row. The first 2 trading sessions of 2018 turning out to be pretty bullish. In fact, in Wednesday's Wall Street session, the Dow, S&P 500, and the Nasdaq all put in new record highs. Now, very interesting, the S&P 500 now up the first and second trading session of the year. The first time we've seen that happen going all the way back to 1987. So last year, of course, in 2017, the S&P 500 up about 20%, its best year since 2013, and clearly with these gains, the bulls remain in charge. Now, relative to sector composition, a very broad-based rally. Most sectors trading higher. Up top, energy, followed by tech, and then healthcare. Energy being helped by a big tailwind from oil, sharply higher on OPEC. Plus, this is really seeming to help lots of the big energy names, big point boosts for the S&P 500 in the energy sector, including Exxon, Chevron, and ConocoPhillips. Now, relative to technology, that sector up about 1%, being helped out by those FANGs again. Facebook, Amazon, Netflix, and Alphabet nicely higher. Expedia also sharply higher on an upgrade to buy over at Bank of America, Merrill Lynch. And chips, the chips are outperforming once again, soaring in particular, AMD on a report that one of the Intel chips, a competing chip, has a design flaw. Now, Intel is refuting that. It'll be interesting to see how all this plays out. But right now, Intel down. AMD did it again, trade higher on the session.
Well, the Federal Reserve officials expect reductions in corporate and personal taxes to boost consumer and business spending, though they remain unsure of the impact of the new tax law. That's according to the minutes released on Wednesday from their December meeting. Bloomberg's Steve Matthews highlights all of those details in this report.
The Fed is 100% behind gradual rate hikes, which suggests that March is not a done deal, but March is very likely for the next rate hike. So if you remember back in December, there were 2 dissents against the December rate hike. Charles Evans, the Chicago Fed president, Kashkari, the Minneapolis Fed president. And there was a sense among the people in the market and some economists that maybe that's just the tip of the iceberg. Maybe those 2 dissents represented a big portion of the FOMC reluctant to go further with rate hikes, even though the center of the committee seemed to be for more hikes. And when you got these minutes, they very much showed that those 2 are very isolated, and that very much the bulk of the committee is full speed ahead for more rate hikes. So that was the way it was read by the market. You know, there were lots of details. They see the labor market heating up. They're very much of the belief that inflation is going to rise, even though it's been under target for a number of years. So they were pretty hawkish overall.
Now, US President Donald Trump has denounced his former chief strategist ahead of the release of his book, in which Steve Bannon has made explosive accusations against both Trump and his family. Bloomberg's Joe Sobczyk has this report.
there was at least some thought in the White House that Bannon could be effective in threatening Republicans in Congress to keep them in line and keep them moving on Trump's agenda. But it had been this had been building for some time, although they were, as recently as October, still sort of regularly in touch, talking to one another, and the White House has acknowledged that that was still going on. But I think that Bannon's insults or statements about members of the president's family, Donald Trump Jr. and Jared Kushner, Ivanka Trump's husband, those had started to rankle the president, and I think this was just a bridge too far, and it really provoked a scorching response from the White House.
Let's take a look at the Asian markets now, and the Nikkei has opened today after a protracted break. It's opened very strongly. In fact, it was up 2%, so it stayed up about 2%. It stayed with those gains from early trade. But I'm joined now by Bloomberg's Rosalind Chin for a check on the Asian markets. Rosalind, what are you picking up?
Well, I think Japan is playing a bit of catch-up, from the good mood that we've had in Asia in the last few days. As you say, the Nikkei up strongly this morning, and also the Topix up by 1 3/4% right now. So as they come online to catch up with the rest of Asia, elsewhere though, not so sort of positive. We're seeing Kospi down by about 0.6% right now, and also in Jakarta, yesterday Jakarta was probably the worst performer, down by 1.4% this hour, and the Shanghai Composite just coming online right now, dipping slightly into the red. So not such a strong picture overall across the rest of Asia so far. Now we're seeing that generally, in response to the Fed saying it was going to take a gradual approach to raising interest rates, that we saw currencies generally slipping on the back of this compared to the US dollar. We saw the yen weakening and also the won. We saw the yen now at 112.74 to the US dollar, and the won at 1067.75 to the US dollar. Now, we've also been hearing comments this morning from South Korean authorities, finance minister and the Bank of Korea governor. They met this morning to discuss their attitude and approach for the rest of the year. The Bank of Korea governor saying the economy is expected to continue its recovery this year, and they've agreed to manage fiscal and monetary policy in harmony, but they will keep watching those forex moves. The currency level is to be determined by the market, but they're closely monitoring it, and they will take action if there is excessive one-sided forex movement. So again, reiterating what was said earlier this week, they're really underlining that approach to the currency markets, at least. Here in Hong Kong, we could see some movements in retailers. Hong Kong just coming online in the last few minutes. Hang Seng Index up about 0.1%. That's because yesterday we saw that the retail sales for November were better than expected, coming in at an increase of 7.5% for the month of November, year on year, against estimates of 4.2%. So we could be looking for some movement there in retailers in Hong Kong. Back to you.
Thanks so much for that, Rosalind. Let's turn to the Indian markets now, and Darshan Mehta and Agam Vakil are here to set you up for the day's trade and to tell you what's happening in the futures and options space. Darshan, first to you, morning. What's on your list today?
Yeah, so Alex, at this point of time, commodities are not doing well, but equities across the world seem to be faring much better. The SGX Nifty is indicating a positive to start to our market. It's indicating a gap up opening of almost 25 points, so about the 10,500 mark is something that we're seeing. But overnight cues coming in from the ADRs were not the good. Vedanta was the only ADR to end with gains. Apart from it, they were selling in Dr. Reddy's, Tata Motors, Infosys, Wipro. So all the other ADRs saw selling pressure that came in. As far as crude is concerned, a big surge of over 2% overnight. The WTI is about the $61.50 barrel per mark. Brent hits the $68 barrel per mark, so there is enough traction that's happening on the crude, and OPEC held the crude production steady, and that is why prices have been able to sustain at these levels. As far as commodities are concerned, weak closing by base metals on the LME, except for one commodity. All of them ended with negative bias. Aluminium and nickel were down almost 1.6%. Copper, tin, zinc, all these counters were down in trade. The only exception was lead, which was pretty much flat to slightly positive. So that was the cues. Even in China, the opening is rather weak. week. Look at all this. Rubber is down 2%, aluminum is down 0.6%. There is steel which is down, copper which is down. So commodities in China are seeing a little bit of pressure in today's trade. As far as gold is concerned, for the second trading session, gold has been trading with a negative bias. As far as fund flows were concerned, FI has bought in 96 crores in the cash market, so minuscule amount of buying. DI has bought in 608 crores after the massive 1300 crore sell figure that we saw the day before. As far as this is the month-to-date figure that we are seeing as far as the FIs are concerned, they bought in 608 crores in the cash market. Now, as far as DI sold in another, they sold in almost 1500 crores in the cash market on a month-to-date basis. What did well? Metals as well as FMCG. These were two indices which did well in trade. Mid-cap index was up almost 0.6%. So the broader markets did manage to outperform the mid-caps and the small caps. Autos and pharma were the ones that actually lagged in trade yesterday. Overall, the Nifty ended rather flat in trade. It was up just 1 point. So ICICI, L&T, Reliance contributed on the positive side. HDFC, Maruti and Infosys on the negative side. But Agam, what are you hearing?
Well, Darshan, the move on the Nifty remains flat. As you can see, there's very little change. In fact, virtually no change at all when it comes to the index. And yet we're looking at a little bit of 3.5% increase towards open interest. In terms of the Nifty Bank too, the picture may not be very different. So what we're looking at is that while the index remains flat, we have seen about 14% increase in OI. So positions have been building up, but not in terms of direction. Again, because of the fact that there was no change in the Nifty or the Bank Nifty, we didn't see any change in the India Volatility Index either, still standing at around 13.6. But the put-call ratio also at around 1.48. In terms of changes in open interest, what we are witnessing was, again, considering it was a lackluster day of trade with low volumes, we saw a little more activity in 10,500. Do remember, we've seen more writing in the 10,600 calls, though we didn't see that yesterday, but that's the mark everyone is watching out for. Moving in, Fortis Healthcare now moves into the F&O band, so we are expecting restricted trade there. But that said, we've seen fresh longs building up in Jet Airways and 19% increase in open interest, and Bata India also looking at fresh longs with nearly 18% increase in open interest. So plenty of stocks to watch out for.
Thanks, Agam. Let's turn to the rupee and the bond market, and Saloni Dhanuka joins us to give you updates on both of those. Saloni?
Good morning, Alex. So talking about Indian rupee, it snapped a 4-day winning streak yesterday and ended marginally lower by 5 paise at 63.53 levels against the US dollar. Now, capital inflows from foreign investors and large corporates largely limited the rupee's fall. On the global front, Asian currencies were trading higher, with Thai baht and Indonesian rupiah gaining the most. While talking about dollar index, it rallied against most of its peers on upbeat US manufacturing and construction data, and after the release of minutes from the last Federal Reserve's policy that showed that central bank is on track to raise interest rates several times this year as well. And snapping a 3-week losing streak, the dollar hit sessions high against euro and yen after the release of Fed minutes. The dollar index posted its largest daily gains in over 2 weeks. Well, traders do remain cautious ahead of the release of non-farm payrolls data, which is scheduled to release tomorrow. Now, coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat to positive opening for the Indian rupee in today's trade. Moving on to debt market, the 10-year benchmark bond yield ended 6 basis points lower at 7.32%. Now, remember that the yields touched 7.42% mark intraday, its highest level since July 2016, ahead of the release of new 10-year benchmark security this week. While global funds decreased their rupee debt holdings for the third consecutive session yesterday, they reduced their debt portfolio by close to 600 crore according to NSDL data, Alex.
Thanks, Saloni, for that. Shifting focus now to the commodities market, and Jayesh Khilnani joins us with all the updates there. Jayesh, not the best cues coming in.
Morning, Alex. Well, not the best cues for the metal space, but as far as oil is concerned, excellent cues coming in over there. We saw a 2% surge in oil prices overnight. Now, this is on the back of positive inventory data that is expected to come out of the US. So the API is likely to report an inventory decline of nearly 5 million barrels for last week. So that's the positive coming in. On the other hand, we understand that OPEC production has also stabilized for the month of December. As per a Bloomberg survey, all the OPEC nations put together, they produced as much as 32.5 million barrels in each day of December. So, positive cues coming in for the oil prices. However, moving on to the precious metal space, gold has posted its first decline in over 9 sessions now. Saloni was talking about the Fed minutes which have indicated that there would be further rate hikes in the US. That has aided to the dollar index climbing back above the 92 mark, and hence the decline in gold prices. As far as base metals are concerned, we saw that the base metal index on the London Metal Exchange declined 1%, and it was the third straight decline that we saw for the index itself. And similar cues can be seen on the Shanghai Futures Exchange, where most of the base metals are trading lower. As far as individual base metals, how they ended overnight, well, copper was down 1.5%, and it hit its longest losing streak since the month of December, down about 3 straight sessions now. Similar was the case with aluminium, which also declined 1.5% approximately, and saw a decline of 3 straight days. Zinc, nickel and tin also fell in trade on the London Metal Exchange, with the exception of lead, which was up in trade. And steel futures have actually declined on the Shanghai Futures Exchange on demand, as demand is seen fading on the Shanghai Futures Exchange.
Right. Thanks, Jayesh, for that. Let's move on to the stock of the day now, and that's Navkar Corp. Nikki Mirchandani is here to tell you exactly why. Nikki?
Sure. Good morning, Alex. Navkar Corp is definitely the stock that we need to keep on our radar for today in the morning. Ashish Kacholia has got 0.7% stake in the company, that is 10 lakh shares at the price of around 187 per share. In the similar quantum, average finance and investment company has also bought in the stake in the company, that's 0.7% stake, almost to the tune of the same quantum that we're looking at for both these Ashish Kacholia as well as the fund house that you're looking at. Shareholding pattern, if you look at the November filing, which is coming on the BSE, you would see promoters holding around 69% stake in the company, while that of public shareholding is around 39%. To just give you a little rundown of what the company is, it's a container freight operator which has a market capitalization of around 3,000 odd crore. And if you look, the company has been reporting profit but is not paying its dividend, and also it has a lower ROE of around 8.06% in the span of nearly 3 years. To just give you about who, details about who Ashish Kacholia is, the net worth of this individual is around 802 crore, and it holds around 20 stocks in its portfolio. The top investment in the portfolio of this ACE investor includes the likes of APL, Apollo, then you have Nozzle and KEI Industries. The company has been, Ashish Kacholia has been increasing its holding consistently in KEI, Moltec and Nozzle.
Thanks, Nikki, for that. Now, a quick update on the defense front. Israeli arms firm Rafael has confirmed that India has cancelled a $500 million deal to develop Spike anti-tank guided missiles. The Indian Defense Ministry has been pushing strongly for transfer of technology in procuring various weapons and other platforms from foreign defense majors as part of its broad policy initiative to encourage domestic defense industry. The company in a statement said that the cancellation was made prior to the signing of the contract, but did not give a reason for the cancellation. However, expressed a commitment to cooperate with India's defense ministry in the future. This comes 3 days ahead of Israel's Prime Minister Netanyahu's first visit to India, and the matter is likely to be discussed during his visit. Rafael CEO will also be accompanying the Israeli Prime Minister. Now, Nikki Mirchandani joins us with the stocks and news. Nikki, what are the stocks that you have on your list today?
The first one that you're tracking is HPCL. There we have an FE exclusive which says that ONGC may pay a sum of around 45,000 odd crore for 51% stake in HPCL, which is almost 45% higher than its market capitalization. Next in the list we have Allahabad Bank. Now RBI has put that bank under prompt corrective action. Given the inspection that it held, it revealed a high net NPA and a negative ROE for 2 consecutive years for the bank. Next in the list, we have SGVN. That's one counter that we need to keep an eye out on, because the company has come out with an announcement saying that the board may consider a buyback proposal on a Jan 8. Then we have Coal India. That company is exploring the possibility of now producing methanol along with your other chemicals, so might just see some reaction. Orenco Solution, the company's subsidiary, is planning to sell its identity and access management business to KPMG. This would be in an all-cash deal in the worth of around 217 odd crore. In bulk deals, couple of them that we're tracking. The first one is Arrow Granite Industry, where Dilip Kumar Lakhi has bought in around 1% stake in the company, and then you have WPIL, where the promoter has also bought in 1% stake in the company. He's bought in around more than 1 lakh shares at a price of 679 per share each. And also we might just keep an eye out on S-Chand, because it's expected to meet Sundaram Mutual Fund along with Franklin Templeton and some other funds today.
Right. Thanks for that, Nikki. Now, Somit Sarkar is standing by with a big brokerage cause of the day that you need to know about. Somit?
Good morning, Alex. On the big brokerages, first we have is Equirus on FIM Industries. Now, they have initiated coverage on the stock with a long rating and a target price of around 1,336. Now, FIM Industries is the second largest player in Indian automotive lighting market and will be a key beneficiary of shift to LED usage in two-wheelers, as the company derives around 90% of its revenue from two-wheelers. Now, effective automatic headlamp on regulation will fuel the LED usage in two-wheelers going forward, according to the brokerage. Also, LED lamps will drive strong value growth, and lower consumption will in the market will aid return on invested capital for the company. Also, the company has a strong record of adding new products which could work in favor for the company going forward. And also going forward, company's margins and return profile are expected to rebound after a blip in financial year 2017. The brokerage is expecting the company's return on invested capital to expand to 13% by financial year 2020, and it is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 18%, 21% and 33% over FY18 to FY20. Second, we have is Equirus Securities on Lumax Industries. Now, they have initiated coverage on the stock with a long rating and a target price of 2,486. The company is a market leader in automotive lighting market in India and has around 35% market share, and will be a key beneficiary of shift to LEDs in two-wheelers and four-wheelers, as the company derives around 68% of its revenue from sales to four-wheelers, while the remaining it derives from sales to two-wheelers. Now, the company is also focusing on increasing in market share in commercial vehicles, tractors and two-wheelers, which bodes well for the company. The brokerage is expecting the company to gain more market share from Hero, and the company also has a large exposure to Maruti, which gives a good growth visibility for Lumax, as Maruti recently introduced LED in its medium, mid and premium segments. Also, the brokerage is expecting the company's return ratios to improve, led by growth and margin expansion. Lastly, the brokerage expects the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 15%, 24% and 27% over FY18 to FY20.
Right. We leave it at that, Somit. Moving on though, it's a Bloomberg exclusive that we have to tell you about. The Maharashtra State Cooperation Department expects to find at least 7 lakh applicants ineligible for the farm loan waiver, which is nearly 10% of the total applicants. Purva Chitnis sums up the latest development in this report.
Out of the 67 lakh beneficiaries who would receive farm loan waiver in Maharashtra, the government expects around 7 lakh beneficiaries could be ineligible to receive this waiver. From our sources, what we understand is that the government has already cleared 49 lakh beneficiaries, but however, it is unclear about the remaining 20 lakh beneficiaries. So after this second round of revision, the total figure for the beneficiaries could fall somewhere around 60 lakh. Now remember, the government had announced farm loan waiver in Maharashtra for 89 lakh farmers, which amounted to 34,000 crore rupees. However, only 67 lakh farmers actually applied. We also understand that so far government has given loan waiver to around 28 lakh beneficiaries amounting to 12,000 crore, and it has already disbursed 23,000 crore for the 49 lakh beneficiaries. So after this total revision, the total farm loan waiver figure could fall anywhere around 25,000 crore or 27,000 crore.
Now, India is adding the least amount of coal-fired power capacity in more than a decade. tepid demand from distribution companies has led to overcapacity across the country. But Power Secretary Ajay Kumar Bhalla says he expects some pickup in demand in the coming years as discoms turn around and start buying more power from producers. Listen in.
We are forecasting for our next five years growth of 6 to 7%. November generally is a low demand month in the winter times. December onwards the demand starts picking up. So November little lower growth is not a matter of worry. We are not falling short of any generation side. If the demand picks up in the coming months as the core sector is growing, and we expect industrial activity especially in steel, aluminium, cement sector coming up, so further downstream industries definitely will also pick up, and exports also are growing. So we expect the power demand to increase.
That's what the Power Secretary had to say in his interaction with Bloomberg Quint yesterday. You'll find the entire interaction on the website, bloombergquint.com. But just a short while from now, you'll also find all the live market action right here on Bloomberg Quint Live. But there are also a few stories that you should consider reading on the website, that's bloombergquint.com. India may have to give freer rein to the rupee this year to avoid triggering US accusations that it is manipulating the currency to support exports. The Reserve Bank of India has already exceeded a key threshold that is monitored by the US on how much it can intervene to curb the rupee's gains. That's according to Nomura Holdings. Explorers like ONGC stand to gain as India plans to incentivize oil producers that use costlier methods like injecting gas or liquid into fossil fuel reserves to boost output. A draft policy released by the Directorate General of Hydrocarbons suggests up to 50% waivers in oil cess and up to 10% higher wellhead prices for production using enhanced oil recovery for up to 10 years. Well, that's all we have time for on this edition of Daybreak, but all you need to know is up next. Do stay tuned to Bloomberg Quint.